Good afternoon, everyone. JR with Secure Metals. Welcome to my video analysis here for both gold and silver. Today is the 5th day of November. It is 11:48 a.m. Eastern Standard Time. Now, before I get into the analysis, I'd like to read this quick article here this morning by Zero Hedge. This was actually an article from this morning, 11/5/2014. Because nothing says best execution like dumping 1.5 billion in gold futures at 12:30 a.m. Eastern Standard Time. For the 5th day in a row, someone has decided that 12:30 a.m. would be the appropriate time, assuming the seller is an investor who prefers best execution rather than the standard non-economically rational share repurchaser in America to be dumping large amounts of precious metals via the futures market. Tonight, with over 13,000 contracts being flushed through the gold, amounting to over 1.5 billion notional, gold prices tumbled $20 to $11.51, its lowest level since April 2010. Silver is well through $16 and back at February 2010 lows. The US dollar is surging. The timing of dump is right as the Japanese trading breaks for lunch. Gold dump. So again, question, is this market being manipulated? But again, the great thing is that these guys that are pushing these prices down also have to buy these ounces that they're selling back. So here's some charts. I'll have the link below. So just a quick analysis. I've tried to make this under 10 minutes here. The weekly chart here for gold, currently in the zone, in the buy zone. Again, like I've said here, anytime you reach one of my zones, whether you're looking to buy, whether you're looking to buy or sell, you don't want to, obviously if you're in a sell zone over here, you don't want to buy at those levels. If you are in a buy zone like these zones over here, you do not want to sell, right? So up here, let's finish this, right? So up here you don't want to buy, over here you don't want to sell. This is the way it works. I mean, these zones work very, very, very well. If you've seen my analysis here before, then you'll see how well my zones work. I do expect a little bit of reaction here, maybe down, coming back down here to the 1131, 1130 zone. That's a confluence with the monthly Bollinger Band over here at 1134, right? So the Bollinger Band is still contracting. Stochastics are getting way oversold here, so you might see a little bit of a correction here to the upside, but as of now it does look like this will possibly penetrate a little bit further, maybe down to the 1130, maybe down to the 1120 zone. Okay, at this level here I would expect a little bit of a move back up, and from here decide if this is going to move higher and retest this level here of resistance, or if it's going to come back down here and create another low. As of now, basically this scenario looks more likely, but again, this is a little bit oversold, and anytime you sell, you do expect a bounce, and vice versa. When you go up pretty fast, you do expect a bounce. But a very, very key significant level here broke 1181. So again, we have to look at the lower levels here. Being that this market is what it is, production costs being at 1200, you're going to have a lot of mining companies right now starting to halt production. And at this level here, I'm not looking to pick up anything here between the 1120 zone and the 1157 zone. Not looking, even though it is a zone, and usually on my zones I usually like to buy. Maybe something very short term, but again, ultimately not long term at all. In this zone, however, I will be looking to acquire right here. This is a phenomenal zone here. You have a flip zone here. When I say flip zone, it basically means that you have resistance back here and is now turned support. So this is a flip zone here. This used to be resistance as it climbed up. This is another flip zone here. As you can see, these flip zones work very, very, very well. Okay, so this is another flip zone here, and as you can see, used to be resistance, pushed the market down. Every time we hit this zone, it pushed the market down. Eventually we broke out of that range, and now this support now turned this resistance now turned support. Metals went higher. So again, Flip zone over here. So worst case scenario here on this metal. Again, not that I expect prices to fall down this high, but at the lowest end, I would probably say that between 1030 and 1050, we should find some long-term support. Worst case scenario, this is the flip zone between 1033, and I would probably say all the way down to around 988. I would definitely suggest that at that point, that should be your last big purchase, and from then on you just want to allow this market to do what it's going to do, and we will see much higher prices. As a matter of fact, on my next video I'll show Alan Greenspan maybe having a change of heart, where he suggested that prices of gold are going to, and this is very recent, in the last 2 weeks. So Alan Greenspan, the former Fed chairman, in an interview said that gold, he expects gold to be measurably, quote unquote, measurably higher. Okay, so again, being that we're being that there's stimulus all over the globe, being that there's a balance sheet of over $5 trillion, being that we're in debt over $17.8 trillion. Again, it just doesn't look good, and you know, you see the headlines and everyone's bashing gold, but the fact is that gold is a different animal, and you just don't want to believe the hype. But at any rate, this is what I'm expecting here. Maybe a drop between 124 all the way up to 157. I expect some definitely reactions here. It might continue to go higher, but again, doubtfully. I would look to purchase over here again, like I said, between 1040 and maybe a little bit lower than 1100. Okay, so 1040, 1100, that's your last buy zone here, and again, that would be very nice. I would safe that from here we'll probably do something like this, maybe zigzag a little bit, but I do expect higher, much higher prices. Not that any of these Fed chairmen is credible in what they say, but when they make sense, you got to point it out, right? So this is the weekly chart here on gold, hitting that flip zone. For the daily chart, again, really not much because it goes back too far, so you really can't see it. But again, you see the breakdown here. Let's go to silver. Okay, silver again. Silver actually on the monthly chart did hit my target of this Bollinger Band 1571, and anytime you can buy at the bottom of these zones is usually good. I would have loved to pull the trigger this morning at around 1515 when I saw the market at 1515, but again, you know, when it's free falling the way it is now, you don't necessarily want to get in the way. But again, my zones work very well even if they're in free fall. Okay, you can see here that again, this would have been a zone for me, and you can see here that these zones work very well. Several ways to draw the zones. You could have drawn the zone here like this as well. Okay, but I like the other way of drawing the zone. So again, very solid. I do expect a little bit of a bounce from here, from the 15 low that we saw, and we are already seeing it. We saw a low this morning of 1515, and now trading in at 1556. But again, I would like to buy. This is where I would like to buy right here, between 1460, between 1470 all the way down to 1330. Okay, will it go this low? I don't know. And you know, the fact is that these Bollinger Bands do a really good job at supporting these charts. So again, being that we are already at the first zone, we might see a jump from here, maybe come back down, maybe go back up here to the 17.5 range before coming back down and retesting this level here, the 1460, like I said, as well as the 1372 level here, the 1370 level, between 1350 and 1375. That would probably be, again, like I said, the last purchase. You can put a stop loss at around $12.50, $11, but again, the downside is roughly $2. The upside is extreme. So again, these are one of the dream trades that I so love about. Again, look at this thing here. If you would have gotten in here, you would have made it easily 2 to 1. But again, down here, I would say that's more of a 3 to 1, and so on. Here is the Dow Jones as well. I've already drawn this here. You see bubble, bubble, bubble. And the reason why I've highlighted this is because I want to say that the mainstream media has done a very, very good job putting down gold, and they've done a phenomenal job propping up this stock market. The one thing I do want to say is that back in 2099, when we saw the NASDAQ bubble, we saw a bubble and we saw a big move to the downside. Okay, this move to the downside was roughly 38%, almost 40%. Then we had the housing market crash, and this is what we saw here, a 54% retracement. Okay, and now I guess what I'm trying to say is that don't believe everything you hear in the mainstream, because again, they're doing a phenomenal job, and I've very, very, very seldom heard anyone suggesting that this Dow Jones is in any type of bubble. So again, you know, I know mom and dad always taught me to buy low and sell high, and you know, right now the Dow Jones 17,545. Does it have more upside? Absolutely. I would put an upside target of at least almost 18,000. Maybe a bit higher than that. I doubt we'll see 20,000 without more stimulus. But then again, we're getting a lot of money coming in from Japan and Europe. So again, that might push the stock market a bit higher. But again, volume is decreasing here extremely heavily, and there's really no suggestion that this rally is going to continue to the 20,000 plus. So again, if this was a bubble here and this was a bubble, I don't see how this cannot be a bubble. You know, this has to correct eventually. So again, just a quick video showing you guys these really great levels. But again, just to reiterate, this is where we'd look to pick up the last batches between 1350 and 1450. Phenomenal, phenomenal, phenomenal buy. All right, I hope everyone has a great rest of the week, and I'll do another analysis here on Friday. Okay, enjoy the rest of your week. Bye-bye.